Understanding capital growth, a very important concept. Every developer must know this. Even if you're not a developer, if you're just an investor, you should know this concept. And this is a two-part video. In the first video, I'm going to discuss some concepts, and in the second video, I've actually got a full-on Excel sheet where I will teach you how to do the calculations and how you can determine the capital growth. So let's begin. National level versus local level. Always remember that the national level, when I say it's for the whole country, and the local level is I'm talking about your suburb. So don't worry too much about your national level. Local, you should concentrate more on your local level. For example, new mining venture. So suddenly a company announces that it's going to open up a mine here and set up infrastructure here, and suddenly boom, all the prices go up and everybody wants a piece of the pie and everybody moves in and everything is good until that company decides to shut its door and leave. And we're all witness to that. New development. If a new development happens in an area, it actually changes the appearance and attractiveness of an area and starts attracting a totally new demographic, for example. So these are the things that affect capital growth. There's a concept called total return, and some of you might be familiar with it, and the ones that are not familiar with it, and that's those are the people I actually want to explain this to. There's capital growth and there's rental yield. I'll just zoom out a little bit. And if you combine them together, that's what the total return is. So remember that when we talk about total return, we're actually talking about the combined sum of the capital growth and the rental yield. Over a period of time, almost all residential areas will produce the same average total return, which is rental return plus the growth as each other. And the reason for that is because of the natural interplay of supply and demand that causes people to move or dwellings to be built, also reaches the point where the cost of rent or purchase is greater than other similar nearby areas, and people start to move there instead. There's actually a video, if you've actually seen all the videos so far in the course, there's actually a video under listening for signals called Sidekicks. And if you go, and I'm talking exactly this, where a neighboring suburb starts going up in price after one of its neighbors actually shown phenomenal growth, and I've given an example there in that video. So if you haven't seen it, I would strongly recommend that you go back and have a look at that video. And the only exception to that is our mining towns. Okay, long-term relationship between rent and capital growth that allows investors to determine what is going to move next. And I'll show you how this is done. So what you got to remember is that if capital growth pushes prices up, it will cause the rental return to fall. And investors push up the rent, and owner occupiers push up the prices. So always remember that. And the reason we want to understand this is because you want to time your development so that you can actually, by the time your development is ready, you've not only enjoyed your profit that you were going to enjoy to begin with, but you've also got that capital growth with it. So if that's happening, it is likely that rents will increase in future and more than the prices. So as a landlord, you would understand landlords catch up only when the lease is up or when the tenants leave. So that's the time that they say, okay, now the rent can go up. So, and how do you measure that? You got to compare the long-term capital growth and rental return versus the more recent performance, which is, for example, last quarter. So say, for example, we get this data for 10 years and we compare that data with the last quarter. And I'll show you how to do it. If relationship between the rent and prices is not in harmony, the one lagging behind is likely to catch up, especially if annual average total return is less than the long-term annual average total return. So rent versus capital growth. These are the things that you got to look at. Is the long term, for example, 10 years annual average total return is greater than the recent years? Yes or no? If yes, capital growth or rent increases are likely. Now, has the number of sales been falling or rising over the years? If yes, capital growth is likely if the sales gone up. And if the sales gone down, increase in rental return is likely. So these are the metrics, and these are some, let's say, litmus tests that you can do to understand where the area is actually going to go next. Are prices / rents at their upper limits compared with similar areas? If prices are high, rent increases are likely, and if rents are high, price increases are likely, and if both are high, neither are likely to rise. Rental return. If rents are static but prices fall, this is an important concept, and I want you to write it down if you can. Take notes of it and go over it again and again, because it takes a little while for this concept to actually sink in. It sounds complicated, but it's not. If rents are static but prices fall, rental yield will go up. If both fall but prices tumble faster than rents, rental yield will rise. Now, to be able to determine all of this, you pick up a book and the book will show you how this is done. Will tell you the same thing, but I will show you exactly how this is done in an Excel sheet in the next video. But let's first look at where, if I want to find out this data, where do I actually find this data out from? So if you look at realestate.com.au/invest, that's a good source to get this data. API magazine, the Australian Property Investor magazine, they publish every magazine that you get. Towards the end of it, there's a lot of data on it, and I don't know how much the magazine costs, $5-6. I've actually had a subscription for the magazine for a couple of years. I don't think I will renew it, but if you do want to find out, just pick up a copy of that magazine from any newsstand, and you can find out, and I'll show you what it looks like. You can go to CoreLogic, which is RP Data, or Residex, or you can visit this website and you can find out this data. So that's one website that you could look at to find this data. That's another website that can give you all this data, and I'll show you how to get it. So if you click on invest on realestate.com, a lot of people might have played around with it, but I think it's really good, and that's where it is. You click on 10 years, you click on this, it tells you what the prices were and how many sales were based on 1st January 2006 to 31st December 2006. So this is for 1 year, and this is 10 years later, well, almost 10 years later. So and that's 1 year. So you can compare this data, and I'll show you how to punch this in an Excel sheet and find out how to extract the information that we are after. Yeah, another thing, that's what it looks like. I actually, because I've got that magazine, I can't give this data out because I don't own this data. But if you pick up a magazine, I actually got it from the back of a magazine, and I just scan them and I put them in a folder, so that if I want to someday do research on a project, like for example, I've been looking at Frankston, so I wanted to find out houses, units, 2014, 2015, what they were. There was another sheet that I was looking at. Because this is a scan, it doesn't actually look quite nice. And not only that, they also publish market indicators for all the states and all different suburbs and this is basically information about the property clock that we have discussed earlier. So if you get time, grab a copy of the Australian Property Investor magazine, go through this data. It is sitting right at the it is usually at the back of the magazine, and I don't know where did I put it. DECF. I really wanted to show you that, but anyway, it was nothing. It was some stats about Frankston, and that's DEF, and I'll just show you what it is. So if you look at this, it'll show you the number sold, the median price, 3-month growth, 12-month growth, 3-year, 5-year, and 10-year, and that's the number that we are looking at. And the reason I'm looking at this number, we'll show you in the next video.